With the Fed losing $114 billion in 2023 and U.S. tax receipts being $7 trillion less than U.S. government expenditures, U.S. monetary and U.S. fiscal authorities are stuck between a rock and a hard place. Taxes and inflation are both sly forms of theft, and in order to not call them what they really are, leaders have resorted to distorting the truth versus making hard decisions and explaining the consequences. So we wanted to use today's episode to explore truth, freedom, and value in a world that's desperate for all three. Welcome to the Bitcoin Daily Show. I'm Dante Cook, head of Swan Business. According to Bitcoin analyst and friend of the show, Joe Consorti, U.S. tax receipts are expected to come in at $2.9 trillion for the full year 2023, and government expenditures over that period are expected to be $9.7 trillion. So that equates to a loss of about $7 trillion. Where is that money going to come from? And alongside of the U.S. government not being able to cover those tax receipts, the United States Fed, which is not actually federal, lost $114 billion in 2023. So on the monetary side, in order to close their gap, what are they going to do? Raise taxes, which is going to decrease business activity and decrease investments into the stock market and decrease tax receipts? On the fiscal side, are they going to cut rates, which is going to increase business activity and entrepreneurship, but also increase inflation and the amount of debt that the U.S. government has to pay back? Like we've said in the past, both sides are stuck between a rock and a hard place, and all of them have trade-offs and consequences, all of which leaders are afraid to face and to deal with head on. So instead, we continue to kick the can down the road and manipulate the system with more lies, with more covering up, afraid that citizens are unable to handle the truth. Let's look at Canada, who's choosing to increase its capital gains tax from a 50% inclusion to 66%. This increases the capital gains tax from 27% up to 36%. More business and more entrepreneurs are going to decide not to build their businesses in Canada. Entrepreneurs like Shopify CEO Toby Lutke. Capital will flow where it's treated best, and so will people. This comes on the back of an announcement like Google building another office in El Salvador to capitalize on the decreased crime, increased growth in the economy, and investments that the government is making in its technology through things like Bitcoin. Capital will flow where it's treated best. This seems obvious. Even EU chief Mario Draghi says, Europe is lacking a strategy on how it's going to shield its traditional industries because the industries face lower energy costs and lower regulational barriers in other places. It's logical that some of these industries will shut down or move outside of the EU. No duh. I can tell you that it's pretty easy to see that because decisions like those of Norway, who are deciding to ban data centers like Bitcoin mining, are going to detract people from wanting to invest in Europe. It's funny that Norway cites emissions as one of the reasons to not have Bitcoin mining in their country. But 98% of their energy comes from renewable sources, 88% from hydropower, and 10% to wind. So I'm trying to understand, how would the energy that Bitcoin miners use give off carbon emissions? You cannot ban Bitcoin. You can ban yourself from it and not realize the value from it. Or you can be like Real Bedford, who after adopting a Bitcoin strategy grew their followings from 30 to 40 people a game to over 250 people a game and over 1,000 just a few games ago, and won the league back to back. Bitcoin has been such a catalyst for Bedford and their football club that even billionaires like the Winklevoss twins have invested $4.5 million into the club and into that town and community. Taxation, banning, inflation are just sly forms of theft, and capital will leave the places where those things are present. A credit-based monetary system has a way of distorting the truth because it's not based upon equity or work that has been created and put it in. Equity is only created on the basis of credit or trust me. Bitcoin is a more truthful system because it's equity-based, meaning that you can only derive value in the system from work that has tangibly been put into it. Yesterday on our show, we highlighted senior editor Yuri Berliner from NPR being suspended from his job. Well, he just officially put in his resignation letter to the CEO. And It's easy to see why when the CEO says that truth actually gets in the way of bringing people together.
The hard things, the places where we are prone to disagreement, say politics and religion. Well, as it turns out, not only does Wikipedia's model work there, it actually works really well. Because in our normal lives, these contentious conversations tend to erupt over disagreement about what the truth actually is. But the people who write these articles, they're not focused on the truth. They're focused on something else, which is the best of what we can know right now. And after 7 years of working with these brilliant folks, I've come to believe that they are onto something, that perhaps for our most tricky disagreements, seeking the truth and seeking to convince others of the truth might not be the right place to start. In fact, our reverence for the truth might be a distraction that's getting in the way of finding common ground and getting things done.
How do we function in society when there's no foundation of truth? How do we do commerce with each other when there's no foundation of trust? Despite Bitcoin's verifiable ledger and source of truth, with physically enforced timestamps through proof of work, there continues to be ways that people will say, you cannot trust Bitcoin because you can't touch it, you can't feel it, you can't see it, and therefore you can't value it. It's made up. And in rebuttal to Bitcoin, there continues to be more and more arguments brought up for things like real estate and fine art and gold, which all have subjective values, by the way. Here's one example in art. I'm probably butchering this for all of you art geeks out there, but there's a painting called the Salvator Mundi, which is worth around $450 million. How did it become worth $450 million when it was bought in 2005 for $1,175 from a dealer at a random auction in New Orleans? Because an art dealer and an expert says that this is probably one of Da Vinci's 17 most famous works. But many people look at the painting and actually argue that it doesn't look very similar to any of Da Vinci's other famous paintings. And in order to be relisted and resold, had to be restored, repainted, revarnished, and then relisted. So it's not even an original painting. And after the painting was last purchased, it hasn't been seen since. It's actually reported to be bought by Saudi Prince Mohammed bin Salman. So how's that for monetary premium? How do you know that this painting is the actual painting? What you're placing on it is subjective value in monetary premium. If you're a skeptic, here's a clip from Chris Kuiper, Director of Research at Fidelity Digital Assets, who on Swan Signal Live today had a great discussion with senior research analyst at Swan, Sam Callahan, about intrinsic value and monetary premium.
I was at a conference a couple of months ago, and the person gave me it's not real. There's nothing backing it. I can't see it. I can't use it argument. Yeah. But then he went on to say that he was a big investor in fine art, and I can see the art and I can enjoy the art. And I said, well, you're obviously enjoying it, but you're talking about buying it and investing in it and holding it. And you said you know the market really well and how much it's worth. So you're obviously ascribing some monetary premium to it, right? So why not just invest in something that has a pure monetary premium? There's no subjective value as to whether the art is good or bad or in vogue or out of vogue or something like that. I don't think I got through to him. Maybe I should have tried more of the attack. I've been thinking lately of what we just talked about with proof of work, where what's backing it is true energy that's been expended. Maybe that's a better tactic. I'm not sure.
To me personally, the backed by energy, I actually think Bitcoin's kind of backed by its monetary properties is the way I think I believe it. Like I frame that like backed by energy is more about like the security and preventing like 51% attack. But in terms of actual Bitcoin's value, it's monetary properties, similar to gold's monetary premium, right? I mean, Peter Schiff was just talking to my fiance on Fox News about this, talking about the intrinsic value. And he talks about the central banks buying gold. And I'm like, do you think they're not, buying it because they're all trying to get second jobs and open up a dental practice or something like building electronics? No, they're buying it for its monetary properties. It's so silly. But then he says like, well, Bitcoin doesn't have an intrinsic value. Gold has industrial use cases. It's used in jewelry. But you really have to focus on the monetary properties. And that can be hard for people to kind of grasp, though, that idea that Bitcoin's value, what actually backs it, is its superior monetary properties.
All money through history started with something that had, quote, intrinsic value or was used. So usually a commodity, you start with commodity monies. And then it became a money that was redeemable in that commodity. And then as we've seen through history, they sever that link to the redeemability of it, as all countries have done. But the point was, it was always built on a foundation or bootstrapped off of that original utility, which is where I think people get this idea of, even if they know and believe that gold is mostly a pure monetary thing, that little bit of utility somehow
That's how it started.
gives it a foundation. And never before in history have we had a monetary good just be launched as a pure monetary good. And I think that's correct. I don't think we ever have had that throughout history. So I'm wondering if that does change the narrative or perception, or just people have never encountered this, a pure monetary good launched out of nowhere, not bootstrapped to something else, not redeemable for something else. It was just purely a monetary thing that eventually emerged as a money. I'm not sure.
And I think that's actually an advantage too. I mean, if it's actually going to function as money, you don't have any distortion in the price of money itself. If it's being used for other use cases, it's a pure, 100% monetary premium. And so it has the information that you need, which is to, coordinate price signals and facilitate trade in the economy between individuals. And so, like, to me, it's actually, if you go one step further, it's actually an advantage that Bitcoin has, that it's not used for any other kind of industrial use case except to function as money itself.
And one last thing about Bitcoin that a lot of people don't talk about is that Bitcoin provides the maximum amount of property rights while also giving people the maximum amount of freedom. Every time that you purchase physical property or physical art or physical gold, you're tied down by those physical things. Telegram CEO Pavel Durov explains about the freedom that he's had by having, in his words, a few $100 million worth of Bitcoin for the past decade.
Also, for me, it was never about money, right? So I have a few $100 million in my bank account or in Bitcoin since 10 years ago, and I don't do anything with it. I don't own any real estate, jets, or yachts. I don't think this lifestyle is for me. I like to focus on what we are doing with Telegram.
You don't own anything? Like big assets? You don't own
no big assets. Exactly.
An island in Hawaii or
no land, no real estate, nothing.
Why?
Well, because for me, my number one priority in life is my freedom.
That's what we're after. We care far more about the things that money can buy than money itself. Money is a technology that represents the things that we want. It's the freedom we're after, the freedom to choose. And the only way that we can have true freedom, the only way that we can know what we're really buying is what we're really buying, is if there's an asset that actually represents truth in between. And the reason that we advocate for Bitcoin is because we believe that it represents freedom for millions and billions of people across the globe. If you're curious about why we advocate for Bitcoin, or you are a Bitcoin advocate and believes that it brings freedom, truth, and value to a world that desperately needs it, like and share this video and subscribe to our channel. After all, we're trying to hit 100K before halving day, and we're so close. We're looking forward to the halftime show with you tomorrow. Again, we won't be having the Bitcoin Daily Show tomorrow. We'll be starting at 2 p.m. Eastern or 11 a.m. Pacific. We're going to have Swan co-founder Brady Swinson and myself as co-hosts, and we're going to be hosting three greats, Lynn Alden and Max and Stacy Herbert, some of the earliest Bitcoin OGs who also can give us a little snapshot into what freedom money looks like in El Salvador. So if you're excited about the halving, if you're excited about freedom and truth, and you're excited about learning more on your Bitcoin journey, please subscribe and join us tomorrow at 2 p.m. Eastern, 11 a.m. Pacific for the halftime show. And with that, we're signing off for today. I'm Dante Cook. Happy stacking.